Hey everyone, A-Market traders and A-Market partners, welcome back to YouTube channel. In this video, I am going to explain most important and one of the interesting topic in today's video. Let me ask you a simple question. Are you trading candlestick? If yes, then this video will help you in a most efficient way. Whether you are a newbie, intermediate or advanced trader, it doesn't matter at all, right? So the topic name is reversal and continuation candlestick pattern. There are various types of candlestick pattern, but I'm not going to cover each and every pattern. I'm going to explain only 3 patterns which is having very high accuracy. Also, it works very well in any of the instrument that you use to trade. It doesn't matter what kind of instrument you use to trade, also what kind of uh, market you use to trade, it doesn't matter, right? So without wasting any time, I'm starting with this. First of all, let me explain you candlestick. What is candlestick? Candlestick is same like other chart, but this candlestick is having 4 component: opening price, low price, high price and low price. Let me explain you using this candlestick bar. So I'm considering the bullish scenario. For the bearish scenario, it works in an opposite manner. So if you are looking for a bullish candle, opening will start from the lower point. So this is what the opening price I'm considering this candle. So 2410 or 11 is the opening price. Then after, price made a low of 2373. Then price made a high of 2605, and then price closed at a 2589. Almost price closed nearby the high price. So bullish, whether bullish bar is there or whether bearish bar is there are 4 components used to be there. If you are looking for a bearish bar, opening price will start from the upper end. So if you look at this candle, just let me show you a candle which is having a shadow. So considering this bar, if you look at this bar, this candlestick, the price opened at 2812 rupees. Then after, price made a high of 2826. Then price made a low of 2650, and then after, price closed nearby the close at 2636, which almost near to the lower price, right? So this is how you can look for the candlestick. You can read the candlestick bar, right? There are 4 components. If you are an intraday trader, definitely all the 4 components are important for you. If you are a positional trader, then high and low, it's not important for you. Definitely closing is comparatively important for you, right? So now let's start with the pattern part. First pattern that I'm going to explain is hammer. So what is hammer and how it looks like? First of all, let me explain you very simple thing. Whenever you are trading pattern, 3 important things that you need to aware about the same. First is identification of the pattern. Second is validation of the pattern, and third is the execution part. So if you are wrong at the identification part, definitely you are not going to success in that particular trade, right? So first important part is validation part. So how to identify the identification part? How to identify the hammer? So according to textbook, what textbook used to say, this is what we can call as body. This green bar is called as body, and the shadow part we can call as this line part is we can call as a shadow, right, or weak, right? So what textbook used to say, whenever you look for a hammer, that 2 times shadow will be there comparative to the body. So this is what textbook used to say. If you are looking for an ideal hammer, at least 2 times shadow should be there. But in reality, even we can consider 1:1 also. So if you look at this, and high upper shadow should be negligible, or it either should not be there. So we can consider a negligible weak is okay, or it should not be there, that is okay, right? But it doesn't mean like that upper long upper shadow is there and we are considering as a hammer. You cannot consider this as a hammer, right? So negligible weak we can consider, right? So if you look at this candle, it seems like hammer, it is having 1:1 compared to the body, so we can consider this as an hammer. But if I show you, let me show you an ideal hammer first, so you will get it, right? Just 1 minute. So we can consider this as an ideal hammer. So some of the traders who don't follow the color of the candle while trading hammer formation, some people trade only green hammer, some people trade green or red, it doesn't matter to them, right? Even textbooks say whatever the color, it doesn't matter, only the formation is important. So if you look at this, the body is some sort of 2765 to 77 point of body is there, and 68 to 32, almost double of the same is there, or shadow is the double of the same. So we can consider this as an hammer. And how to trade this? onto the break of this. Now, most important thing is just write it down. Whenever you are trading a reversal pattern, first thing that you need to look for is whether prior trend is there in an opposite direction. It means what? If you are looking for a bullish reversal scenario, prior trend should be in an opposite direction. So if you look at this, I am looking for a bullish scenario, prior trend is in a downward trend, and I am looking for a bullish case. That is fine. That is confirming to this, right? Second point is formation of a reversal bar. It means formation of a we are talking about hammer, so formation of a bullish hammer is there, yes. So third point, how to enter. Third point is execution part. So as and when price breaks the high of that hammer, we can look for a buy entry above that. So this is an aggressive entry method. But if you are looking for a confirmative method, you should wait for one candle close above that hammer. So you can consider this candle close, and onto the break of this, it means what? You should look for a follow through candle after the hammer formation, and as and when price breaks the follow through candle high, you can look for the entry, and over here you get a reward out of it, right? So you get a reward. Where you will put your stop loss near a swing low, or that would be a stop loss, or you can consider one candle stop loss also. That is totally upon you, right? So now whenever you are trading reversal pattern, I explain you. First thing that you need to look for is whether the trend should be is there in an opposite direction. If yes, that is fine. Second point, look for a reversal bar. Third point, follow through of that reversal candle should be there, and onto the break of the high for the bullish scenario and break of the low for the bearish scenario. Now, second most important thing, whenever you are looking for a reversal pattern, it's important to look at the important support either or important resistance. Don't trade at random point. So if you are looking, if you just look at it, this is a very important support area, that the breakout point change in polarity concept, that same worked as a support, resistance work as a support, and there is a formation of hammer exactly at the support area, and all the points are confirming to this, and we onto the break of this high, we can enter the trade, right? The next pattern is shooting star. Shooting star is opposite to this. So there should be a candle which is having a upper shadow should be there, and the rest scenario should be same according to textbook. Two times shadow should be there compared to the body. So we can consider this as a shooting star. Now it is important whether it is forming as an important resistance. Yes, if you look at it, this is a point from where the fresh rally has been started. So shooting star exactly formed at the same point, and if you plot the Fibonacci, exactly it is formed at a 50 or 61.8 level. So you can consider this as a genuine formation, and onto the break of the low, we can enter the trade and we get a good reward out of it. So if you are looking for a confirmation candle, you can wait for one more candle which is follow through onto the break of the low, you can enter the trade. Now the most important question is, the follow through candle should not be wider one, right? If it is a wider one, don't enter at the scenario. Why? Because risk reward would not be in the favorable case then after, right? So that is why it is important. A follow through candle should be a medium one or lower one, that is fine, but wider candle should not be there. So this is an example of hammer formation. Now I am explaining another reversal bar, which is bullish engulfing and bearish engulfing. So first of all, I'm considering bullish engulfing. So how to spot the bullish engulfing? A candle which is covering the previous whole body. So candle which is engulfing the previous whole body. So I'm first of all, I'm explaining a bearish engulfing formation. So you can look at the scenario. This is a price, this is a point, this is a resistance point, right? This is a resistance point, and exactly at the same point, this is a bullish bar, and this is a bearish bar. Bearish bar engulfs the whole previous body, and then after you can see this price revert from the same point, and you get a beautiful move after that. In bullish engulfing and bearish engulfing, it doesn't require to look for the follow through candle, but if you are looking for the follow through, that is fine. So if you are looking for a follow through, then this would be the entry point. The break of the low would be the entry point, and you get a beautiful trade out of it. Again, if you look at this scenario, this is also a bullish engulfing bar. Onto the break of the low, this would be your entry, and then after you get a good trade out of it, right? So this is how you can look for a bearish engulfing, sorry. Now let me explain you the bullish engulfing scenario. So if you consider this scenario, this is an this price, this reversal bar formed at important supports. Look at this scenario. This is an important support 1500. Price stepped this point after a long period of time, and exactly at the same point, there is a formation of bullish engulfing pattern. This green bar engulfed the whole previous red bar, and onto the break of the high, you get a beautiful move out of it. So this is the most important pattern, bullish engulfing and bearish engulfing. So first we explain first I explain hammer and shooting star, then I explain bullish and bearish engulfing. Now I am explaining the third important pattern, which is tweezer bottom and tweezer top. This is the most powerful pattern that I have ever seen. If you are looking for looking for this pattern on a higher time frame, definitely this will work. This will give you reward like 1:5, 10, 15. It will give you reward like this. So how to spot the tweezer bottom and tweezer top? So any candle which is having any candle, how to spot the tweezer top? Any two candles which is having a two equals high, two equal high should be there. So obviously if you are looking for a tweezer top, the first candle should be the red bar and the second green bar, and second candle should be the red bar. So that would be the scenario. And if you are looking for a bullish, sorry, tweezer bottom, then first candle should be the green and the red, and second candle should be the green. So let me explain you the bullish, so tweezer top first. So in real time scenario, the slight variation should be okay. If you look at the scenario, this is the highs of 24732, and over here the highs of 4753. Still this is not a perfect ideal scenario. Let's look for the ideal scenario rather than this random one. So now if you look at this, just 1 minute, just 1 minute, just 1 minute. Let me jump on to the lower time frame for the better uh, uh, now see this example, probably it is a ideal one. This is the ideal one. If you look at the scenario, this is the ideal one. This, look at the high 2317 and look at this high 2317. Equal high is there, and the next candle is the bearish bar. We can consider it as a tweezer top formation. If you are looking for a best ideal case scenario, you should look for the bearish bar should cover at least 50 to 60% of the previous body. It means the green bar. It should cover at least 50 to 60% of the previous bar. If it is the case, definitely we can expect a reversal from that point, and then we can. So over here, it's not covering the 50 to 60% of the bar, but still we can consider as per textbook and see what kind of result you get. Now let me explain you the bullish scenario. It was a bottom scenario. So this is what it looks like when you look for an ideal scenario. Okay, this is the pattern. If you look at this is an ideal formation. It covers almost whole body. Now if you look at the scenario, the low of this 2300 2784, exactly the same low is formed by this candle, and it covered more than 50 to 60% of the previous body. And onto the break of this high, definitely we can enter the trade. Now this is a reward you get. So this is how you can trade this tweezer bottom and tweezer top. Definitely it is important to trade at important support and important resistance. If you are trading at important support and important resistance, the accuracy will be very high in this sort of scenarios, right? So these are the patterns that I used to trade, and this is having a very high accuracy. These patterns are having very high accuracy. If you look at this scenario again, one more scenario of tweezer top formation, the highs of 3911 and 3914, we can consider this as an ideal tweezer top. So exactly it covered more than 50 to 60% of previous body, and to the break of the low, what kind of reward you get, right? So I hope you enjoyed this video. For this kind of updates, stay updated with AMarket. Thank you. Bye bye.